In this power panel, top experts navigate the intricacies of cyber risks, offering insights to help you stay ahead of threats, from ransomware to data breaches, and what you need to be prepared for in 2025.
Hello everyone, and welcome to the Insurance Business TV Cyber Insurance Power Panel as we wrap up the year together. Yes, this expert group has been providing its insights each quarter, and now they are back one more time to look at the standout moments of the year and offer their insights on what to expect in 2025. They are, first of all, replacing Catherine Hall on this occasion, Adi Sharma, who is Senior Vice President, Cyber Growth Leader Canada at Aon. Derek May, Vice President Technology and Cyber at Hub International. Mila Arajo, AVP Digital Shield Personal Cyber Practice Leader North America at NFP and Aon Company. And Suman Jazra, Insurance Broker at Billyard Insurance Group. So welcome everybody, and let's look back then on 2024 and which cyber-related events stood out and what were the lessons that you learned from them. Derek, I'll start with you.
Yeah, thanks, Paul. For me, it was really twofold. CDK, which affected the auto dealer industry across North America, where we saw 15,000 auto dealers go down as a result of their third-party dealer management system, which was hosted by or supplied by CDK. When they suffered a ransomware attack, these auto dealers suffered about 2.5 weeks of downtime, which meant going back to good old pen and paper to record service appointments, try to sell cars, etc., which was really uncomfortable and difficult for them for that period. Even today, they're still trying to figure out what that business interruption looks like. So definitely one of the main ones that stuck out. The second one was CrowdStrike. Now that wasn't a ransomware type situation as we saw with CDK. This was just your plain old system failure. So they tried to push out an update that unfortunately wasn't correct. It led to a lot of our big airlines and other big, Fortune 500 companies dealing with some serious issues on their front. Also, big business interruption losses. So for me, those two incidents really stuck out and gave us as brokers an opportunity to speak to these evolving risks, which can certainly have a dramatic impact on our clients.
Well, Suman, I think that Derek might have stolen the two big ones there, but did anything stand out for you?
Yes, the event that stood out for me is the X, when 200 million users their data was breached, and it was very uncomfortable for the people who were using the social media. And I feel that what we learned from that is the awareness. And we usually say that, okay, like people think that AI is very, very good and it can be a defender. But I personally feel at that moment when the data was breached for X users, the AI was the actual working for the attackers. So again, I mean, we do need the awareness. We need to teach the clients what needs to be used in these kind of social media. What are the how the cyber policies can be helpful to them.
Certainly, the Twitter breach caught the eye of news agencies around the world. And Mila, anything that caught your eye in the past year?
Yes, so along the same lines as what we've been speaking of here and what everyone else has brought up are the concerns when it comes to data breaches. The National Public Data Breach situation comes to mind. This was a massive data breach that exposed, at first it was indicated 1 billion records. Eventually, as investigations have gone on, we're down to several million, but that's still a pretty hefty amount and very concerning. So on a corporate level, what's interesting is it sounds like the most recent information is that National Public Data will be maybe looking to file for bankruptcy. And on an individual level, all of the people that were impacted by their information being released are going to be facing potential consequences of this that may not be evident today or tomorrow, but could be evident further down the line. Because one of the interesting things about data breach, and I think that this is where the spotlight comes in for people, is that when the information is out there, it could be used to, create like an identity theft situation, but it could also be used to create various types of fraud, medical identity fraud, criminal frauds, as well as, impersonation and other elements. So these different things could occur today, they could occur tomorrow, but most likely they're going to occur a little bit further down the line, 6 months, a year, or 2 years down the line. And that's when people are going to start to see the impact when their data has been exposed on the dark web or otherwise. As a result of that, there could be financial loss associated. And this is where personal cyber can really come in. And the spotlight, I think, due to these types of events that are occurring more and more, is that personal cyber policies can actually help individuals recover from these financial losses. And that's something that we didn't have a lot of focus on previously, because it's a fairly new product that's just hitting the mainstream now. So I think that that's going to be a key takeaway, and something that's really stood out here as an opportunity for us as brokers to provide solutions for businesses, but also for individuals.
And AD, just to bring you in for the first time, I mean, it sounds like some of your colleagues have taken some of the huge breaches from the past year, but anything that stood out for you?
Yeah, thank you, Paul. I think in our experience, obviously we continue to see a lot of ransomware and a lot of business email compromise, but really, we're still seeing public sector organizations being attacked and being a very popular target. We continue to see threat actors attacking, small towns, municipalities, cities, governmental agencies, because truly they are attractive targets. They have a lot of confidential information, and historically they haven't necessarily had the best security controls, primarily due to budgetary constraints and whatnot. So City of Hamilton was a victim recently. So we are seeing a lot of public sector entities being hit with ransomware and business email compromise. We hear about the Indigo Books and the Giant Tiger and the Gateway Casinos and so many others that happen in Canada, but you don't necessarily hear of the small towns and municipalities that are getting hit fairly regularly. And in terms of lessons learned, I guess, one of the things that we are seeing, which is concerning, is that controls that were previously considered best in class, such as multi-factor authentication, which is, I think, the bare minimum what an organization needs to have, is now being bypassed in certain cases by certain aggressive threat actor groups. So it's really imperative for organizations to have strong controls in place outside of just the usual multi-factor authentication, but really going one step ahead and having robust detection and response tools deployed in their environments, as well as 24/7 monitoring, which will really help to sort of catch these threats before they actually become a real thing.
There's always some sort of scary note that comes out of these meetings. Perhaps that was it, to think of those threat actors bypassing MFA. But let's look at another issue now, and that's capacity availability. Has, of course, remained largely very high, and that's supported some ultra-competitive market conditions. Suman, where do you feel that insurers are adding value, and how should brokers separate the best policies from the rest?
I personally feel that the insurers are adding values. I personally feel that it was offered before, but then it started to calm down a little bit. But now the insurance are very active. They are offering a lot of competitive pricing, coverages, and the response. I feel that the response time for the claims are not the greatest, but they are offering. Northbridge is offering the cyber assistance program as well. So there are insurers who are offering a lot of different coverages. Again, it is very important for the clients and for the brokers like us who can offer the right coverages to the client, make them aware what covers what, and the policy wording is very important.
Okay, and AD, of course, we've seen a huge emphasis as well, haven't we, on what insurers can do to prevent a cyber attack in the first place?
Yeah, I think that's Paul. That's critical here, because there really is a large emphasis on some of the proactive offerings that some of these insurers are now being able to offer clients. And really, it's a win-win situation for both parties, because the insured really doesn't want to have a cyber attack and have to file a claim under that policy unless it really is required and happens. And the insurer, for obvious reasons, doesn't want the insured to have a claim. So having some proactive offerings in place to really help protect an organization and prevent a cyber attack from happening in the first place is proving to be a key differentiator for many of these carriers. We see vulnerability scanning, we see user awareness training, we see tabletop exercises, incident response plan reviews. These are just some of the examples of value-added services that some of these carriers are able to provide to their insureds, with the purchase of a policy. So that's really something that's interesting and that is differentiating some of these insurance companies from others. In addition to that, you will have your usual suspects. Flexibility to make policy wording adjustments and changes is important to us as brokers and for clients. Underwriting service and response times is also important. Claims handling is also very important, and so is breadth of coverage and price is also very important. But really, in order to differentiate, we're seeing a large emphasis on proactive services, which is interesting.
Yeah, and Mila, how in your opinion are insurers adding value? Are there any new coverage options that you've seen introduced this year, and what's made those stand out?
Yes, some of the coverage options that are being developed to add value, which have been really interesting this year, I think, all revolve around, managing the cyber response and providing proactive responses for clients to have something to rely on once there is a situation. In particular, resources for incident response plans. I know that wordings are being adapted and are evolving very quickly to address more social engineering risks as well as AI-related coverages. And I think the development of personal cyber apps and resources for individuals has also been very important, tying back to these risks that are occurring where people's information is being more and more compromised online, whether that's through municipalities, hospitals, large data breaches, or even smaller, more local ones. For example, with Digital Shield, one of the things that we've been working on with our partners has been coming up with customized solutions. For example, with personal cyber apps, with resources to educate members of the family or individuals. And I think that also one of the things that we're going to start seeing is a little bit of a marriage between um, the commercial cyber policy and the resources for the individuals, whether they be employees, key employees, members of organizations, in the event of a breach, to try and support and come around and look at this from a 360 angle, where we recognize that our companies are at risk if the individuals who have access to the information of our companies are at risk as well, and that there are now personal cyber solutions available to respond to that as well. So a lot of super interesting development and collaboration, I think, between different policy lines is gonna really form what we're looking into for the year ahead.
Derek, have you seen any interesting developments as well, or is it a case of some old policies coming back?
Yeah, you hit the nail on the head. I think for the cyber world, we went from a very competitive landscape a number of years ago, just trying to get people to buy policies. Then we went through a very hard market, which meant higher premiums, reduced coverage, etc. Now that we're back in a more competitive environment again, we're seeing some old coverages kind of make a reappearance. And I think obviously that's through brokers on this call are pushing the insurers very hard. It's coming from all angles to get some of these coverages back, and we're seeing them relent. So obviously that's in the best interest of our clients to have broader coverages, better pricing, deductibles, etc. And so that's been a breath of fresh air for us this year. Things like non-IT contingent business interruption insurance has been huge. So we're starting to see these supply chain vendors start to be included now within the scope of the coverage, whereas traditionally it was only restricted to just those IT third parties that we were reliant on. So that's a huge step in the right direction, especially for a lot of different industries that heavily rely on that supply chain. And we're keen to hopefully keep these in place, even if we do go back to a harder market in the future.
Anything that you've seen come back as well, AD?
Yeah, look, to Derek's point, not necessarily new this year, but something like property damage coverage. So cyber insurance typically has a bodily injury and property damage exclusion on it, which means that organizations cannot claim any physical damage losses on their cyber insurance policies due to that exclusion. And typically that exclusion also extends to property policies, because property carriers do not want to pay out cyber losses on their policies. So there really is a bit of a gap in that space, and there are some solutions to cover organizations for property damage losses that are arising out of cyber incidents. And that is something that we're slowly seeing picking up steam once again this year, especially for large clients that have this exposure, like manufacturers or power and utilities. Large risk managed clients are who are thinking of their risk in a more elaborate way are where we're having some of these conversations. In addition to that, the CrowdStrike incident really has taught us the importance of the good old system failure business interruption coverage, which has always been there, but there wasn't enough claims examples and loss examples for it. So it's very important for organizations to understand, how their business interruption is triggered. How does the waiting period work? Does it end upon restoration of your operations or restoration of your systems? These are all important questions because an event like the CrowdStrike incident hopefully doesn't happen again. But if it does, you need to be equipped to know that some of these things can potentially be covered under your cyber policies if there are favorable terms and conditions. So yeah, these are important items, I think, to look out for in your insurance policies as we enter 2025, because I think as we've determined on this call, the types of threats are only getting more mature and more sophisticated, and I'm sure we'll have a fun 2025 with lots of new threats, which is unfortunate, but it's the truth.
Well, if you don't mind, Adi, even though you are new to this call, I'm going to stick with you for a moment with a bit of a leading question. And it's one I'm going to ask to all the panelists. You are, of course, all brokers. So what do you wish your cyber insurer partners knew or did differently? What are your thoughts, Adi?
I guess my answer will be twofold. Number one is pricing. I think we've obviously established that we are in a soft market. Insurers are in growth mode. Pricing is very, very competitive in this space, but it's also inconsistent. We still have cases where we see quotes ranging, for example, from $70,000 to $140,000 for the same limit and retention option for the same client, which makes us look a little bit confused in front of clients, if I'm being honest. But there still is that lack of consistency among carriers when it comes to pricing. But overall, it is a very ultra competitive environment for pricing. So that's good for the end buyer. I think number two, what is important is that insurers don't deviate from the critical controls that are required for cyber insurance qualification, such as, whether it's multi-factor authentication or user awareness training or incident response plans or endpoint detection and response tools. These are all controls that are important for insurance companies to really put a strong emphasis on before accepting organizations into their portfolios, because having these controls is really what will sort of lead to the longevity of cyber insurance as a product. And I'm sure no one on this call wants to be unemployed. So we want this product to stick around for the long term. So it's important that carriers don't deviate from these critical controls, no matter how soft the market gets. I think insurance companies should focus on some basic minimum cyber hygiene before they undertake organizations into their portfolios.
Derek, anything that you would like to see improve, particularly perhaps on the underwriting side?
Yeah, I think it's just having the underwriters just be a little bit more invested in the clients that they're underwriting. So often there's this big separation, and yes, that is our job as brokers to be that intermediary. However, I think some accommodations of the of the underwriter to really get in front of the client, get to know them. Certainly we're always trying to offer that as brokers to put two and two together. But sometimes we do see a little bit of a hesitancy from the underwriters in really trying to get in front of the client. And I don't know if that's just them feeling a little bit nervous about maybe what questions they'll be asked, or, are they going to, have to respond to a coverage related question or something like that. But I think just a little bit more of a willingness to find solutions together, and obviously, as the broker in the middle, we're always trying to bring the two parties together. So if we can do that, get everybody on the same page, no doubt that we're going to have successful relationships and outcomes through that course of action.
Okay, some great points made there by Adi and Derek, Suman. But does it all come down at the end of the day to competitive pricing?
Yes, it is. I agree with both of them, with Eddie and Derek, because competitive pricing is very important. Clients are very educated. They look for competitive pricing. They look for people who can give them the best coverage in the best price. So it is. I totally agree with Derek. Like, the underwriter should be a little bit open-minded. They should be little bit looking into the full picture, what client is looking for. Give us, like, we are the bridge between the underwriters and the client. So we would like to, I'd like to offer the best price to my client with the best insurance company. There are companies out there who are pretty much out of the norm. They are they're very good, and they do listen to you. If you talk to the underwriter, they are very much willing to speak to you, give you the options, give you the solutions. So but again, I mean, the pricing is we have to look for the best price for the client. So sometimes it is a win-win situation, but sometimes you are stuck in the middle. You are giving the best coverages to the client, but the pricing is too high. So I wish that it's a flat thing across the border, so that we can offer the right pricing to the client, and all the coverages are included in that.
Okay, so competitive pricing and having underwriters having underwriters be a little bit more accommodating are some of the examples given so far. Mila, is ultimately what we're looking for is just for our insurer partners to listen a little bit more?
I think the cyber insurers are really active in keeping their ears open to all of the latest risks, and so it's been quite interesting because this is one of the few areas where we are being hit left, right, and center with bad actors evolving all the different types of schemes that they're throwing out there, so that we are constantly having to evolve. And then when you throw in things like AI and various the social engineering. I think the insurers are keeping their ears open. They are looking at what's coming across the table, and they're looking for innovative ways to respond. But given how quickly the landscape is evolving, I think that it would be great if we could find a way to develop more agile response systems, or times when developing the response to the various needs. For example, if we need to adapt a wording to respond more to the AI risk or to deep fakes, any of these emerging risks that are happening, it would be great if we could find a way to be more agile and just be able to respond more quickly, because obviously it does take time to evolve wordings. It does take time to uncover what some of the coverages are that we need to start putting in there. And sometimes we have to have the loss experience behind us before we can actually even make those changes or see that there's a specific need. So I think that's the only thing. Fantastic, I think, involvement from everyone who's involved in this field. It would just be great if we could make things move quicker, so that we could put these protections in place a little bit more effectively.
Well, we want things to move quicker, but something that is creeping up on us perhaps a little bit too quickly is 2025. And as we look ahead to that year, what is the main trend or issue that you think brokers need to be aware of in this space? Suman, what are you thinking?
I personally feel that the brokers, there are clients out there, the phishing, and I personally feel the ransom coverages, that's more important for the clients. It's going out there. I think the clients are not well educated in that area, so we should be educating them. As a broker, we should be telling them what entails that, what are the coverages. And I think we should use AI, the expert in that area, and we should be using that platform to find out more about what kind of attacks are there, what can we do, what are the insurance companies, how can they help when these attacks are happening, what are their coverages. So I think that we all should be educating our clients and telling them what they should be covering in their policies.
Okay, and Derek, from your perspective, any marketplace changes that we should be looking out for?
Yeah, I think 2025 is going to be the year of rate takebacks. I think the underwriters have sort of fire sold the renewals and new business for cyber in the last year or more. Now we're starting at a place that's pretty low, I would say, historically. So I think there's some room for them to increase the rates on our clients, especially as things like ransomware, social engineering persist. The claims have not gone away. I think, as we discussed earlier in the call, the claims are still there. It's just, more capacity in the marketplace. People are fighting for market share. And as a result of that, that's driven the pricing down. But the claims are still getting paid. They're going to continue to be paid. And I think it's only going up. So it's inevitable that pricing is going to go with it. So because we're seeing some pretty big discounts this year, I think it's a pretty good bet that we're going to see some increases in 2025.
Okay, and I imagine that no matter what the trends are, Miller, it's vital that clients are just aware of what they need.
Yes, I think, a main trend is that as brokers, we need to be more aware of, helping educate our clients and having an open ear to listening to them and, really being able to look at the policy features and understand that the value that each of these policies can offer when we're speaking to our clients can vary significantly. So, it's not a one size fits all concept. I think, things like future loss avoidance coverages, proactive support, all of these different things can be features that could be important or not as important depending on what the client needs. So I think, the clients don't have the technical knowledge to understand what the intricacies are of cyber policies. And in a lot of cases, they don't even realize what the risks are that a cyber policy can respond to. So, in our experience, we've seen clients where they don't realize that there's something that could help them recover from a social engineering or one of these emergency scams, or what to do in the event of a data breach and how that can impact them long term. So I think, the type of policy that you can offer can vary greatly. We've got some great partners offering lots of different solutions. And I think from our side, from the broker perspective, to become more aware of what the risks are and really focus on that through these discussions is important. For example, one small, type of risk that individuals could really benefit from having a personal cyber policy and the advice associated with is sextortion. Believe it or not, there were over 6,000 reported cases of sextortion impacting Canada's youth in the last 18 months. And understanding that there are products that clients can rely on and obtain resources from in the event of either a financial loss or even a psychological need, I think that's going to be key. And I think we could really advance and provide a lot of solutions for clients by really strengthening our relationships and knowledge around those.
Okay, so some excellent offerings so far, Adi. And to wrap it up with you, are we going to see increased competition next year?
Yeah, Paul, happy to wrap it up. Honestly, I think we've established that these market conditions that we're seeing are obviously very competitive, but it doesn't look like they are a result of positive claims activity. I don't think cyber threat frequency has gone down. If anything, it's actually gone up. Maybe the severity is down, but the frequency certainly is up. So it definitely seems to be a result of increased competition, as opposed to positive claims activity. Claims frequency is rising every month, but the pricing and capacity definitely seems unaffected. So we should be prepared for these market conditions to certainly not last indefinitely. I don't know if 2025 is going to be the year that we're going to see it shift, because there still is a lot of competition and certain new entrants in North America in the insurtech space specifically. But I think a hard market might be here sooner than we think, or at least a bit of a reversed market from what we're seeing right now, where the prices do start to increase and capacity does start to come down a little bit. In addition to that, I think another thing that we need to be wary of in 2025, I think organizations really are looking for help and assistance in quantifying their risk. I think there's still a large amount of organizations that are not buying adequate levels of cyber insurance. This is actually a great time to get back up to those levels of insurance that are required, just given the favorable market conditions. But a lot of organizations are looking for that assistance in quantifying their risk. And that's really where we as brokers need to come in and equip them with the right data, the right tools, and the right analytics to be able to make that decision as to how much do different types of cyber attacks cost their business, right? Whether it's a ransomware, whether it's a malware, whether it's a state-sponsored cyber attack. What does that really look like in dollars and cents on their balance sheet? And that's how they can determine on what kind of insurance limit to buy. So those are sort of the two things that I think we should be wary of in 2025.
Great thoughts, not only today, but throughout the year from this panel. And huge thanks to all of them for their insights across 2024. And if you enjoyed our cyber insurance power panels, well, good news. They'll be back in 2025. Until then, keep it right here at Insurance Business TV.